Morning, everybody. Welcome back to Trades and Gains, or good evening, depending where you're watching from. And you're probably wondering, why does everything still cost more? Well, in today's episode, we're sponsored by the Consumer Price Index, the government's favorite way of saying, relax, inflation is fine, while your grocery bill is screaming, liar! Now, November CPI just came out. Inflation is cooling, the Fed is cutting, and somehow everything still feels expensive. So today we're breaking down what CPI actually said, why markets reacted the way they did, what this means for traders, what this means for the economy, and what this means for you, your rent, your rate, and your sanity, most importantly. Let's go ahead and get right into it. So let's talk about the headline numbers. Here is your clean scoreboard. CPI year over year came in at 2.7%, baby. Let's go. Core CPI year over year, and that excludes food and energy, came in at 2.6%. 2-month CPI increase was up 0.2%, and shelter is still sticky at 3% year over year. Energy is getting hot again, coming in at 4.2% year over year, but are we really shocked with all the AI infrastructure and power that thing is taking? No. The translation of all this, though, inflation is cooling, but it's not dead. The Fed is winning, but it's not victorious. It's kind of like they won the battle, but they're still losing the war. And prices are falling slower than your motivation to check your bank app. Also worth noting, October CPI data is missing because the government shut itself down. So yes, this CPI comes with an asterisk the size of the national debt. Now, let's talk about the real problem with CPI right now, and that is shelter. And this is the villain of the movie. Shelter inflation is still running at 3% year over year. And before anyone says, but rents are falling, yes, new leases are cooling, but CPI measures existing leases, which update slower than Congress passing a budget. So what happens? Rent goes up, CPI stays hot. Rent cools, CPI shrugs, and rent falls, CPI says, let's circle back in 12 months. This is why the Fed keeps saying inflation is moving in the right direction eventually. Now, shelter is the anchor dragging CPI behind the boat currently. Next, we're going to talk about energy and food, the uninvited guests that you're just waiting to leave. Energy prices are back to causing problems. Energy year over year, it's up 4.2%. Electricity is up 6.9%. Natural gas is up 9.1%. And fuel oil, 11.3%. Yes, that is still a thing, believe it or not. So if you're wondering, why does inflation feel worse than the chart? Congrats, you drive, eat, and heat your house. Food inflation, food at home, it's up 1.9% currently, and food away from the house, up 3.7%. Restaurants remain the biggest inflation scam in America. You're not paying for food, you're paying for vibes, labor shortages, and a QR code menu. Now, core CPI, why does the Fed care about this exactly? Well, core CPI at 2.6% year over year is the Fed's favorite number. Why? Because it tells them wage pressure is easing, services inflation is slowing, the economy isn't overheating, and this is why Powell cut rates. Waller wants more cuts, and Williams says rates are near neutral. The Fed isn't panicking. They're confident, cautiously confident, lawyer level confident. So does this mean we got to just wait for the other shoe to drop? Because I really hope not. Now, what does this mean for the Fed exactly? Well, this CPI basically screams, you can cut, but don't get cute, my friends. The Fed now believes neutral rate is below 3%. Inflation is trending down, and the job market is finally starting to soften. But they're terrified of one thing, cutting too fast and reigniting that inflation. So expect some slow, boring cuts, no emergency easing, and no 2020 style money cannon. This is controlled descent, not a bailout. Now, what does this mean for traders? Well, now the fun part. On the bond side of things, CPI cooling equals yields drifting lower. Long duration bonds benefit, and curve steepening continues. TLT, ZB duration trades, they're still in play. On the equity side, this CPI is Goldilocks-ish. Like Goldilocks adjacent. Not hot enough to spook the Fed, but not cold enough to scream recession. That's bullish for SPY, QQQ, and rate-sensitive growth. But here's the catch. We have a rotation risk. AI, megacap tech, and hyperscalers are priced for perfection. If inflation stabilizes instead of collapsing, rates stay higher for longer, multiples stop expanding, money rotates, and watch industrials, energy, think free cash flow monsters for energy specifically, healthcare, and select financials. The CPI trend supports rotation, not YOLO chasing. Now, volatility, this CPI doesn't kill volatility. It just compresses it. Expect chop, fake breakouts, CPI, Fed, jobs whiplash. This is a great environment, though, for options, selling premium, and range trades. Bad environment for emotional traders and zero DTE gamblers with, well, no plan. Luckily, we don't have that problem over on free Wi-Fi radio. Now, what does this mean for the economy? Well, the economy is doing something rare. It's slowing without breaking. Inflation, it's falling. Jobs are cooling, and growth is still positive. This is what the Fed calls a soft landing, and what everybody else calls, why does it still feel bad? Because, well, hiring is frozen, wages are slowing, and the cost of living reset higher permanently. So that's why the average American right now, despite us getting this positive print, you're still hurting. Inflation coming down doesn't mean prices go down. It just means they go up slower. That's the part that nobody really likes to explain about this. Now, let's go ahead, get on with your morning so you can join us over on free Wi-Fi radio or Investor Central Club, and let's wrap this up. CPI confirms disinflation. The Fed stays on track for gradual cuts, and markets, well, they stay supported. Volatility stays alive, and consumers still feel squeezed. This is not 2021. This is not 2008. This is not a crash. This is a long, awkward middle chapter you're just hoping we can get out of. So yes, inflation is cooling, but rent is still high. Energy is annoying. Restaurants are robbing you, and the Fed is still pretending it planned this all along. Welcome to 2026 setup mode. Markets will rally, pullbacks will hurt, and patience will outperform panic. And if CPI taught us anything today, it's this. Inflation may be falling, but your bullshit detector should stay elevated. I'll see you guys for the next CPI report. This is our recap for the day. I hope everyone has a great day. Make sure you like, subscribe, comment, leave your hottest takes below. Also, don't forget, sign up for Investor Central Club. One of the best options, flow software. I stream it daily. I use it daily to find long-term swings. And they are one of the people who power this channel. So make sure you head over there. If you do subscribe, we are giving away an annual membership to Investor Central Club once that page hits 5,000 subs. It's currently at 4,750. So let's go make that happen. Let's go make someone's dreams come true. Over $1,200 in value for free. Anyways, I'll see you guys in the next video. Have a great night. Have a great day. See you on stream.